Hi, thanks for joining me again. I was asked during the week if I could provide some examples of a bullish change in sentiment when a market had been downtrending and then sentiment changed to bullish and price started to rise again in response. We're looking at the chart of the All Ordinaries, the ASX All Ordinaries, during the GFC, when price moved from almost 7,000 points and bottomed out at almost 3,000 points, a loss of over 50%. In this case, there was no real example of climactic action. There was no selling climax as such. This bar looks a little like a selling climax in shape, but the volume doesn't suggest it was actually a selling climax. Instead, as the world news slowly turned more positive and less bearish, sentiment slowly changed in the market. And the change in sentiment took a period of time. If I actually switch to a monthly chart, this is a weekly chart, that took over a year to complete. If I switch to a monthly chart, and there's the GFC there, it's a little more clear. You can see that price had been in an uptrend for many, many months. And there was some suggestion around this period that some issues were starting to form. But the market shrugged them off and continued higher, albeit with reducing spreads. And even when the market started to roll over, it didn't look too serious at the time. But then there was a breakdown bar here. It's not a very clear breakdown bar, but it's a breakdown bar all the same. If you look at the close for this month, it's the lowest close for over 12 months. That's taken out a lot of gains, 12 months worth of previous gains. And that level is worth noting, as is the low of that bar, for obvious reasons. Now, we'll just come back and tidy that up a little bit. Here's the close. Here's the low. Now you can see that with the close coming in about here, here's the volume down there. So it was slightly above average, but not especially high. There was support come into the market in this part of the bar. There's still supply up here. In this position, demand had come in and bought what supply was on offer. And that caused the market to attempt to go higher the next month. But it failed to some extent. Price moved lower. There was a final move up over 2 months. But the second bar down here, the volume was increased and it closed well off its highs for the month. Price pushed back down to the lows of the range. There was a final attempt to hold on here. It was like the last gasp, but then price actually broke down here, continued lower for 2 more months before this bar came in, where there was good buying off the lows again down here. And then for 3 more months, price drifted lower, but stayed within the range of where the buying had come in. So you can see this dragged out over a long period. And price even here traded well below the lows of the previous month before buying did come in. You can see volumes finally increased to a level that's higher than all the previous volumes. The highest volume for years and years. So buying did come in here, but only after price had seen a little support come in between here and there. Price drifted lower with reducing spreads and volumes. So you can see that selling is becoming exhausted. There was even an increase in volume and a narrowing of spread here. So there was a telltale sign, but it would have been hard to take that at the time and buy too much, maybe some tentative buying, but buying definitely came in on this bar. Price still hadn't moved above where the initial demand came in, but there was no doubt that on this bar here, demand came in, price broke out the following month. There was no actual test of the breakout, and price continued up. You can see that there was ongoing testing through the market following that before the market really started to accelerate higher over the coming months. It took quite a while for the Australian market to properly recover. But you can see where the change in sentiment came in. It was this bar and this bar. After the initial tentative buying came in on this bar, then there was reduced selling, some tentative buying, and then some serious buying before the market broke out. Now this is CVN on the daily chart, and this is what you'll see more often. A down bar, although this is closed as a slight up bar, you can see the market has been downtrending pretty seriously. You see volume increases considerably. Price dips below the previous bar, but closes back up mid-bar. Next bar is up, and price actually moves up before it comes back and tests this level for strength. This is a more orthodox change in sentiment. For whatever reason, whether there was an announcement or whether the market just saw value at these lower prices, you have a high volume bar come in. It's probably not a selling climax, but it's strength coming in, and you can see price responds higher, and that's telling you that quite a bit of the supply, if not all of it, has been bought, and there's no sellers left in the market, and price can move higher on what is, if you look down here, reducing volumes for this period up to here. And then there's buying coming back in on this bar. You see, when you get a bar with abnormally high volume after previously low volume, and then an up bar or two in response, it has to suggest a buying came in. At the time, you might have thought, oh, it's going to continue lower. But when you get an up bar in response, that should be a telltale sign to you that there was excessive volume. A low close is often engineered to make the market have a bad gut feel, and if there's further sellers in the market, they will sell on that news, or if the market pops up a little bit, they'll think, all right, I'm getting out. But instead, price goes sideways and consolidates. You can see this consolidation period continued for quite a while. If we mark the low of this range, you can see price was retested here, and a very similar bar to that initial down bar formed right there. Volume was very similar, so buying continued. In response, the same thing happened. Price went up, came back, and tested the strength of the buying before price moved up again. You see, if we mark the low of this one, then price has come back and tested for a fourth time. You can see volumes now getting very low. The third one was here, volume was lower. So you had two very high volume down bars, and then two much lower volume down bars. You can see that supply has now started to dry up, and in response, prices moved up and then gapped higher. This is a slightly different one. You can see prices gapped lower here. Price has been in a strong downtrend. Price gaps lower on what is obviously excessive volume. Look how high the volume is. It's excessive volume. Closing low, giving you a bad gut feel. A few more buyers were drawn out here, but look how far price fell. Almost nothing. You would have expected price to accelerate lower if that was all selling, but it didn't. Price hardly moved lower at all. Then the next bar hardly moved lower again, and volume was really low compared to the previous two bars. Then there was a very little narrow bar in response, which was obviously some buying because price moved higher and volume was almost the same as the previous bar. Then we had an absorption bar, an attempt at a test, but by now there was some cottoning on to the buying in the market, and then price pushed away cleanly from there. A couple of little tests in response, and then price moved up to this level. Here's another one where you had a serious down bar on an increase in volume. Once again, this is strength coming in. I think this one actually failed in the end. At the micro end of the market, you can't always guarantee what's going to happen, but there was definitely buying coming in here. You can see that price moved down to this level, closed in the middle. There was a response higher, which helped you confirm that really was buying. Prices come back, tested the market, tested the buying, and found that volume is now very low. Look how low it is down here now. And then price accelerated away. And I think it actually failed in the end, but the change in sentiment was obvious. Widespread down bar, very high volume, close in the middle, then a response higher. Wyckoff called this an automatic reaction. When all the sellers in the market at this level had temporarily been taken out, and in response, price moves higher very easily on reduced volume because there's almost no sellers left in the market. And finally, we have RXP, very high volume, once again on a down bar, closes off the low. Next bars are higher. You can see that when price moved lower to test, it was a very brief and shallow test. Volume was very low, and then price accelerated higher from there. So you can see how the shape of the bar, that bar is fairly obvious. That bar is widespread down bar, high volume, close off the lows. This is where the buying has come in. This one was slightly different, but you can understand the concept. Volume was still coming in down here, but there was no downside follow through. Price stabilized, if anything, after this initial down bar on the very high volume. Price stabilized and then moved up in response. By the time price moved up to here, it was well and truly obvious what had happened. It should have been fairly obvious when you saw two tests on lowish volumes after you'd seen what happened here. This one took a little bit of time to complete with the two down bars at a similar level on high volume. This was your accumulation here. This was a test. This was a test of the strength of the buying before price moved higher. I think it went up to about 50 cents, and then there was another issue emerge. And then we don't look at monthly charts very often, but it's much clearer on this chart and easier to explain over a short period of time that you saw some tentative buying come in here to the close. Price continued lower. There was some buying on this bar, definitely buying on this bar, and then price broke out above this little range. You see volumes really started to increase as price moved higher. That was people who didn't buy down here realizing what had happened, and then they were scrambling to get into the market, which is possibly one of the reasons why the market took some time to actually get out of this sideways range. Okay, I think I made my point. Thanks for watching again. See ya.